Hello everyone, welcome back to another exercise tutorial from our BUS 223 Financial Management course. In this playlist we are looking at Chapter 3 problems, and in this particular video we're going to be looking at problem number 4. So let's read the problem together. It says a firm's income statement included the following data. The firm's average tax rate was 20%. Cost of goods sold 8,000, income taxes paid 2,000, administrative expenses 3,000, interest expense 1,000, depreciation expense 1,000. And then the question is requiring three things from us. A, what was the firm's net income? B, what must have been the firm's revenues? And C, what was EBIT, or earnings before interest and tax? So let's start with A. A wants us to find the firm's net income, right? We don't have the net income given in the question, but we do know a few things. We know that the company have paid income taxes of 2,000, right? And we know that the average tax rate for the company is 20%, right? So if we assume that the taxable income for the company equals X, okay, then we can assume that X multiplied by 20% is going to equal $2,000, right? The taxable income multiplied by the tax rate would equal the amount of tax that the company paid, right? Then we can play around with this formula to find X, which in this scenario represents our taxable income, right? So we can take this 20% to the other side. And since it is a multiplication, then we're going to divide the 2,000 by 20%. And we know that 20% equals 0.20, right? We can change the percentage into a decimal form to simplify our calculation. So that means X is going to equal $2,000 divided by 0.20, right? We move to our calculators. 2,000 divided by 0.20, and that is $10,000, which means that the taxable income for the company was $10,000. So I can reiterate this and say taxable income equals 10,000. And knowing this, I can also find out the net income. The net income would be the taxable income minus the amount of tax that was paid. So this means that net income equals the taxable income of $10,000 minus the amount of tax that was paid. Sorry, that's a minus the amount of taxes paid, which was $2,000. That means net income for the company was $8,000. Okay? And that is part A completed. Now let's move on to part B. It says, what must have been the firm's revenue? Okay? Now that we know how much is the taxable income, we can refer back to all of these information right here and figure out what was the revenue by working our way backwards, right? If we know that the taxable income is $10,000, right? If we add these expenses on top of it, we can figure out what was our revenue, right? But let's represent it in an income statement format, and we'll say B, revenues, which is unknown, right, less cost of goods sold, which was $8,000, okay, and of course revenue minus cost of goods sold should give us gross margin, but we're not really worried with the correct standardized format right here. We're just going to try to find what's our revenue. So then we'll take out the administrative expenses. Administrative expenses. Let me just give myself a little bit of more space here. Okay. And the administrative expenses was $3,000. Okay. And then we also have depreciation expense and interest expense. So this depreciation expense, which was $1,000, and interest expense $1,000 as well. $1,000. Okay. Now the revenues minus all of these expenses are going to give us the taxable income, right? And the taxable income in our case was $10,000, as we have calculated in the first part, right? $10,000. All right. Now we can, after we have laid this out, we can run the numbers and see what was revenues, what was the revenues for the company, right? We can start from here and work our way back up by adding all of these amounts on top of the taxable income, and that should give us the revenues, right? So we can turn back to our calculators and say $10,000 plus $1,000 plus another $1,000 plus $3,000 plus $8,000, and that will give us $23,000, right? So I can here go back here and delete this and write $23,000. Okay? And you could say something along the lines that from the given data, we find that revenues equal $23,000. Okay, and that would be the answer to part B. Finally, for part C, what was EBIT? First, to answer this, you need to know what EBIT is. EBIT simply means earnings before interest and taxes. Okay? Which in this scenario, based on the accounts that we have, EBIT is going to equal the revenues minus these particular costs only. So we're not going to consider the interest. We're just going to take these three expenses: the cost of goods sold, the administrative expenses, and the depreciation, right? So we'll start with the revenues and then deduct cost of goods sold, administrative expenses, and depreciation, and that will give us the earnings before interest and tax, right? So we're not going to consider the interest, and we're not going to consider the income taxes paid, right? Okay. C, let's go back to our blue. Revenues, 23,000. List cost of goods sold, which was 8,000, and the administrative expenses, which was 3,000, and finally the depreciation expense, which was 1,000. Okay, that will give us EBIT, which should be 23,000 minus $8,000 minus 3,000 minus 1,000, and that's $11,000. Okay, and that's how you solve any problem that is similar to problem number 4. Here's the complete answer. In the first part, we managed to find what revenues are, what's the net income. Okay, based on, in the first part, we managed to find what's net income based on the amount of taxes paid, and knowing that the tax rate is 20%, we worked our way back. We played with the formula to find that the taxable income was 10,000, and based on that, the net income is going to be 10,000 minus the amount of tax that was paid, which is 2,000. That means that net income equals 8,000, right? So if I want to, for example, finish this income statement, this simplified income statement we created here, we're going to add, this is not really necessary, but you can add the tax or the the income tax paid. This is the taxable income, and then we're going to deduct the amount of tax paid, which is 2,000, and that will give us the net income, right? That's not really necessary because we just, in this part B, we were just trying to find what is the total revenues, but just so you get a clarification on why we have stopped here. We could have completed, but it wasn't necessary, right? So from the data that we have organized from the question, we found that the revenues, or the total revenues, were 23,000. And then we moved on to the last part, part C, which wanted to for us to calculate EBIT, which is earnings before interest and tax. And again, we've done a similar thing, but we neglected the interest and the taxes paid. We just took revenues and deducted the other expenses, the cost of goods sold, the administrative expenses, and the depreciation, and that gave us the earnings before interest and tax. All right. I hope that you found this video useful, and with this tutorial, hopefully you'll be able to answer any similar question. If you have any questions or anything that is unclear, please write something down in the comments, and until I see you in the next tutorial, keep on studying.